we're going to talk about how to use data, how to drive solutions, how to drive smart decisions in our everyday workflows, which we think is important. The second theme that we want to focus on is like, what's the ripple effect of those decisions? So as you're making decisions in a large exchange, or as you're making decisions in business, how does that impact your stakeholders? How does that impact your customers? How does it impact the regulatory? And we have some really, really good stories to tell the group today. My background is I'm co-head of A&M Crypto. I've led for 20 years restructurings. I've been interim CFO. So it's paramount for us from an A&M perspective as advisors to be able to go in and organize data in a way that allows us to make decisions. And what we've seen is we've seen data in some of my large clients was Lehman Brothers, where I was CFO for 3 years, FTX, Terraform. And we've seen two sides of it. We've seen the misuse of data or ignoring data that exists. But I think what we're also now seeing is sort of a convergence, particularly in actually crypto native companies using data more appropriately, being more transparent, working with the regulators and so forth. So the way we'd like to start is, Adam, would like to start with you, maybe give a little background and maybe talk about like what you're seeing and how you're using data appropriately in your business.
Sure. Hi, I'm Adam. Nice to meet you. My background's in intelligence. I got my start at Interpol, where I was building systems to do open source intelligence analytics. So what bad guys were talking about online as they were moving illicit money, moving illicit goods globally. From there, joined the U.S. Air Force and spent 4 years active duty doing mostly intelligence work and 2 years as a prosecutor. I was a judge advocate in the Air Force. Then started Inca, and we're growing. Got 65 people globally now, and we do risk intelligence for businesses from L1s, L2s, exchanges, banks. We're growing a lot with banks, stables, et cetera. To answer your question, I think like one of the hypotheses that Inca was founded on and started on is that the data that you need to analyze for risk is moving open. The theme comes out of the DoD. Take recent events, like recent national security events in the United States, like Benghazi. The DoD had no idea what was going on, and we were watching it on Twitter happen live. I was in the room. And so we're just taking those themes and applying them to crypto, where we look for not just on-chain data, but we combine a lot of different data sets, open source data from Telegram, Twitter, Reddit, trading data, and then combine all those data sets to identify different types of risks. So one real life example that we did recently is we helped identify the Paxos fat finger, where Paxos accidentally minted 300 trillion worth of PYUSD. We were watching on chain, so we were watching on chain and alerted PayPal, who's a client of ours, as this was happening on chain, so mints and redeems, stuff like that. But then we also collect a lot of social media data, and we can see and use the wisdom of the crowd to identify risk in real time. So there's a bunch of dudes, sitting in their basement drinking Monster Energy drinks, tweeting about the fact that this was happening, and that was a very valuable secondary data source for us, where we were able to take that, alert PayPal right away, and stop that from going to market and bringing down that stable coin. A real life example.
I see in your line of work, given your background, I think you've seen a lot of bad stuff, right?
Yeah, absolutely. Yeah, happy to talk about it. Yeah.
We'll get into that later. So, Amanda, what about yourself? How do you view data?
So I actually have a somewhat similar background to Adam in that I also started kind of like on the, I'll say, government side. I was a federal prosecutor for nearly a decade at the Department of Justice. Then I left, went to be the chief of legal affairs at Chainalysis, went back into the government, founded a nonprofit, and now I work at a company called Verify VASP, and we are the only purpose-built solution for travel rule. And a lot of people don't necessarily know what the travel rule is, but it's one of the most key things in terms of compliance, because it is the requirement that we've had in TradFi. So if you know SWIFT, we're basically the SWIFT for crypto. And it's just the requirement that information travel with the transaction, which prevents the anonymous free flow of money. That is somewhat counterculture to like the origins of crypto. So some of crypto struggles with the idea that the anonymous free flow of money will never be a thing after 9/11. But it actually is a guidance put out by the Financial Action Task Force that exchanges, vast people who transfer value need to transmit with that the information about who the counterparty is. So Adam was talking a lot about on-chain data, open source intelligence. We are what would fall into kind of like off-chain data, which means that who is actually behind that transaction, who is sending, who is receiving, is something that the VASP need to send. So that information is insanely critical, because if I'm law enforcement and I'm serving a subpoena, say on a KuCoin, right, and I'm just picking on Evan for a second because he's here, but if I'm serving a subpoena on an exchange and I want to know who's on the other side of this transaction, I've got victim money going into an exchange, who owns that account, who is the person receiving that money, they better have that information, right? Because the only way that I'm going to get that money back or help that victim is if the exchanges are keeping accurate information of who's sending money, who's receiving money, who are they holding that money for. And so travel rule data is like this super nerdy area, but that data, the quality of that data is insanely important. And accurate travel rule data has actually been known to nearly eliminate impersonation scams. So from a crime prevention, consumer protection view, travel rule data is some of the most important data that the ecosystem needs.
Great. And Edwin, from your perspective at the exchange?
Yeah. So basically, we handle like your persecution and those data every day. And I'll just give a data example for how we actually handle those intelligence and how we actually put into actions. There was one project was get hacked, and we noticed that the fund was deposited into KuCoin, and then immediately the project that contact with us, and then we also noticed those suspicious transactions, and then we immediately like freeze those assets within KuCoin, and also we have like something like outlines in different exchanges. So we quickly like helping with the project to contact with different exchanges, and then we start sharing intelligence with each other, and we it takes us only like 10-20 minutes to freeze everything. So and basically everything has been done like pretty well, and no user will suffer from that hack. So basically what I'm trying to say is that when we get the intelligence,
yep,
and we need to combine with the direct actions to stop what is going to happen. And then after that, after we stop those funds, and we will go to like the project will try to go to the local regulator to file a police whatever the thing, and then we can recover those assets to the project immediately. So a combination of the intelligence and action is actually how exchanges like doing daily to stop what wrong things go into the market. Yep, and trying to protect those users. Yep.
That's great. So Amanda, you've been involved in this space for quite some time. How is like when you think of the interaction between the exchanges or the government, how has that evolved over the last, say, 5 or 6 years? Is it more transparent? Like, what's your view?
Yeah, I mean, I think with some exchanges, it has definitely gotten better. That tends to kind of depend on how well their regulator does at examining and supervising them. We've seen some exchanges get much better at working with law enforcement, and then we've seen some exchanges continue to be pretty terrible at working with law enforcement, even though they say they have KYC and they say they work with law enforcement. I think it kind of depends. I think that process we could make much better and much more streamlined. It's still, I think, very manual. I think one of the things that's really unfortunate is that crypto is so global, and it moves so quickly, And the exchanges are oftentimes very global, but what isn't global is law enforcement and governments and the laws. And so part of the problem that you see is, like Edwin mentioned, we get a call from law enforcement, we freeze the funds. But the problem is that not every law enforcement jurisdiction has the mechanism to seize the funds. So if you're an exchange and you say, okay, we're going to freeze these funds, go to law enforcement, get us an order. If they're in a country where they don't legally have a framework for that, or maybe the criminal is in a foreign country, they can't be extradited, they can't be arrested. I'm going to geek out a little bit on the law here, but most jurisdictions only have criminal forfeiture, meaning you have to arrest the person and get a body in order to get a seizure warrant to serve on that exchange. If they don't have a body, if the guy's sitting in Russia or in a non-extraditable country, a lot of jurisdictions don't have something called civil forfeiture, which is I'm allowed to take the funds to give them back to a victim without prosecuting somebody. And the FATF has recently put out a guidance that says more countries need non-conviction-based confiscation schemes, because otherwise the poor exchange says, I can't freeze this money forever. Somebody needs to take it. So if you're not going to take it, what do I do with it? Now, this is where folks like Adam come in, and they do civil processes, and they use lawyers, and I'll let him talk about that. But we need the framework for law enforcement to also be able to take those funds without necessarily having to have a prosecution in place. And that is a giant missing legal piece that we need in order to turn intelligence into seizable action.
Thank you for teeing me up. Yeah, and that's exactly right. So, on the law enforcement side, we do absolutely need it globally, and there needs to be more coordination across countries. There are, for what it's worth, there are quirks in the U.S. civil system that basically allow Inca and other companies, if they wanted to do it, to freeze some assets globally, even if they're not sitting in the United States. So, like in your example, actually, I'll give you a real life example. We have a client that's an L1. They have a decentralized exchange that's building on that L1, not in the United States, and the exchange was hacked for $300 million. Offshore exchange, victims are offshore. They came to Inca to find out who the bad guy was, who the hacker was. We got a bunch of intelligence on who we thought it was, and then we filed a civil suit against a John Doe, meaning we don't know specifically who it is, in Florida. So we filed a suit in Florida for $300 million for an offshore exchange. We were able to freeze about half of the money because it was all in stable coins. So the bad guy is the guy that was getting sued, and we used what's called a civil temporary restraining order to go, and then we just served that TRO on Tether and on Circle, and they were able to freeze those funds and return them to the victim. So there are avenues, but this is a very, very new area of the law, and very, very kind of cutting edge in both tech and legal mixed together. So it's by no means settled, and we absolutely still need the law enforcement side. So it's not to discount that at all. But there are options, right? So if KuCoin gets hacked, I'm not saying that you will, but if KuCoin gets hacked, right? Even if the civil structures are not there in place for the jurisdiction where it happened, arguably we could actually file a suit in the U.S. and then go and freeze some of that money.
That's great. So Edwin, when we think about global adoption, transparency in the digital asset space, do you think more rules and regulations surrounding this would help more adoption with particularly retail customers?
Yeah, exactly. Because we are suffering one thing, which is that different jurisdiction or different law enforcement giving us different orders.
Yep.
Right, and then we are a global company, and we if we execute one order or one letter, then there will be a conflict with the other jurisdictions. Then sometimes it confuses us as an global exchange. Yeah.
Yeah, that makes total sense. We think about not even just data, but the rules and regulations that we're seeing with the Genius Act or MiCA, and having the interoperability, even just with stable coins, very similar on the legality side, is having rules in place that allows countries to interact with each other for for the benefit of the consumer. Like ultimately, you want the benefit of the consumer. That's needed in this industry.
Yeah, if I could add to that and your question, I think you're also starting to see savvier retail customers who aren't early adopters, who are starting to enter the crypto market, especially with FOMO, but they're doing it in a way where they're actually looking at the differences between USDC and USDT. Like Adam mentioned, Circle's willingness to burn and reissue. And I know I have friends in Argentina who, when they're looking at stablecoins, they're actually looking at what is Tether's rate of compliance. What are they doing in terms of sanctions? I don't know that I want to put my money into something that's mixing it up with Iran or North Korea. And that is something that I think we didn't see at the beginning, where because there were fewer options and the industry was kind of like more under attack from the US administration, people just kind of went to like where it seemed like it was cool to go. But now you have retail investors looking at who are the exchanges that have good consumer protection, who is going to help me if there's scams, who does help with law enforcement, because so many people are thinking, well, what if I'm scammed? What if I'm the victim? Are they going to help me? Is Circle going to help me? Is Tether going to help me? Is KuCoin going to help me? And I think compliance does start to become an advantage in a way that it didn't necessarily have to be, when now these companies are competing with each other for who is going to adopt that, right?
That's
because
right.
We're not going to put our money in an exchange that's terms of service basically says we don't have to comply, like we're not going to do this, we're not going to have comply. Some of them used to be really, really sketchy, right? Have no KYC, you could open an account with just an email address. That's kind of terrifying for people who are used to moving over from banking, from KYC, from FDIC insured accounts. They are not going to put their money in something that looks sketchy as hell. So I do think that some of the exchanges are thinking from a competitive advantage as we're trying to get this new business and people who are looking at the industry, where can we show ourselves as being safer, more compliant, and like more what they're used to from TradFi.
And maybe to feed on that a little bit, maybe talk about the travel rule. Like, how effective is the travel rule in adoption and clarity for users?
Well, the user doesn't have any idea, because it's like if you went into I'm going to really geek out for a second, but it's like if you went into your bank and did a transaction and you're a customer of the bank, sometimes they'll put your information in and you have no idea that they're submitting a form, right? But every once in a while, you will see, we see some exchanges that are, I'll say, not necessarily compliant, or it's like checkbox compliant. And you'll see this sometimes with unhosted wallets where they'll say, are you sending this to yourself? Because if you're not, they don't want to collect that data, right? And so you'll see this like auto prompt of, are you sending this to yourself? And it won't say, or are you sending it to somebody else? But it needs to, because if you're sending it to somebody else, then they have to follow up with, who are you sending this to and who is the person you're sending it to? And if they're not doing that, then you start to see these exchanges that kind of sort of do compliance, but sort of not. And that can be wildly problematic. And we see it sometimes when they message and they'll blast a message out to compliance@qcoin.com. That may not even be an email address at QCoin, but now they've just sent PII in an email into the ether. If they're regulated in Europe, it could be a GDPR violation. So we see like a lot of messy stuff that's basically checking the box, but isn't real travel rule compliance, which then creates huge issues, because if you don't have that robust data and then law enforcement comes, or Adam needs that data in order to do intelligence, and you took garbage data, it's kind of like they say in AI, garbage in, garbage out. Yep. So we can't have a system where basically nobody's asking who's the money going to and who is it from, and then actually have the ability to help victims or cooperate with law enforcement. It just becomes a giant bucket of illicit funds.
Hey, I actually got a question. Can you just describe the travel rule, generally speaking? Like, where is it mandated? I know it's like I understand that it's like a FATF rule, but like, where is it actually mandated? Like, where is it actually used?
So this is actually part of the problem, and I'm sorry, we're going to geek out a little.
Yeah.
But like the travel rule came from TradFi. This has existed in for banks, and that's why SWIFT exists. But basically, it's just the idea that you have to send counterparty information, right? You have to send who's the money going to, who's it coming from. The VASP that it's coming from has to be identified. And importantly, the VASP that it's going to has to be identified. Or the person that the funds are going to has to be identified. Adam's question, which is a really good one, is yes, FATF has put out guidance and FATF has suggested best practices, but jurisdictions all over the world have been very spotty in what have they put into place requiring that, right? Some jurisdictions require more things than others. So you see these different rules everywhere. And if you're a global exchange and you're sending money to all these different places, how do you comply with each different country's regulations? The easiest way is to just do best practices and comply with the FATF guidance, which is where Verify VASP crushes, because we were built to the rule. We didn't just build a tool, right? But that's a really good question that companies struggle with was, well, I'm sending it to someplace, but they're not regulated and they don't have that obligation. So how do I comply? And the easiest answer is what banking decided years ago. You just get into SWIFT. And if you're not in SWIFT, you're kind of sketchy. And if you're in SWIFT, you're good, right? Which is like a wild oversimplification. But that's essentially where things have to move, because otherwise, how is somebody in compliance going to take the time to figure out what's their travel rule obligation on the other side? It's just not feasible, right? Yep. So people jump into the Verify VASP network, they're in, they're verified, they can do everything. It takes less than 3 seconds, there's no friction. It's very different when RegTech builds towards the rule instead of some of the problems that you see with tools that build to the customer to check the box, but not actually satisfy the rule. I think you see that sometimes in blockchain analytics, and not specific, but like in transaction monitoring tools, where they built the tool not having any understanding of how AML CFT worked. They built it for like the concept, but not the actual rule. Do you know what I'm? I
know exactly. I mean, that's I get it.
So Adam, well, let's talk a little about. We touched a little bit about on and off chain data and how you're using it in your business. We talked a little bit about consumer protection and silver recovery. Maybe just explain a little bit more how you're attacking on-off-chain data with addressing, getting recoveries in the litigation front for consumers.
Yeah, like at the action side?
Yeah.
So like our core business is combining all these off-chain data sources like social media data, trading data, data from GitHub repos, data leaks, grabbing all of that data, and then mixing in on-chain data too. But we're not a forensics company in the traditional sense where we have like a SaaS platform and then you do tracing. We provide actual real finished intelligence on these different issues, and it can be sexy stuff like sanctions evasion, terrorist financing, and it can be not sexy stuff like treasury risk or how scammers and fraudsters are using a particular system or stealing users away from your business, right? And then on the action side, we don't just stop at like, hey, okay, here's the bad thing, here's the intelligence. We've come up with a couple novel ways to actually stop the bad thing from happening. So that can be, we work with a stablecoin, for example, who had a huge issue with scammers creating fake versions of their stablecoin and then listing them on decentralized exchanges. So they were losing users. Those users thought that they were using this stable coin and they were getting their money stolen. And it was like tens of millions of dollars. It's a shitload of money. And then it's also like a trademark and IP issue. So and this is all automated. We were able to identify who listed the token, where it was being listed, which exchanges, how much trading volume there was. And then we automated a process to basically send out a legal demand letter to the general counsel's office of the decentralized exchange that says, take this stuff down or we're going to sue you, love Inca. And that went from a $10 million problem to a $0 problem overnight, basically. So it's like on like one end of the spectrum, and on the other, we're doing like, some crazy litigation stuff. I'll just tell you one story. We have another L1 client who they have some issue where there's an entire scam company who's convincing users of this L1 that Donald Trump is going to move the entire equities market onto this L1, and so you could trade Apple stock on the L1. So buy this tokenized security off-chain now for the low price of 50% off. You can buy Apple stock before Trump moves it to this equity to the L1, and then it's going to be full price. And this is like, these guys have stolen like $1 billion, like a shitload of money. The L1 doesn't know what to do. They're trying to coordinate with the FBI. Shocker, the FBI is useless. Sorry. And so now they're coming to us, but they also want to be arm's length from the lawsuit. So even though we're working with the L1, we're actually representing victims that have lost money. We know exactly who the bad guys are. We know that they live where exactly they live, and we're going to go and we're going to freeze it all, and then just take their money. And then as soon as we kick off that process, as soon as we freeze the money, the feds are going to. I assume that the feds will get involved then, or not, right? And then we just take all the money back. And Inca keeps a third, which is a beautiful thing.
How long does that process take? Is there a general
Yeah, it depends on the case, and it depends on there's a lot of different factors. But I mean, it can take. Sometimes it's really short. I mean, sometimes it's like we can get a TRO, so we can go from like victim has lost money. We can go from that to freezing assets in 24 hours, like very, very fast. We can get an emergency TRO. It's super fast. The entire case to like actually then take the money and get it back to victims, that takes 6 months-ish. But the money's frozen. In the meantime, the money's frozen. You can see exactly where it is. It's on chain. Again, and there's nuances to it. Bitcoin's a lot harder than a stable coin, as an example. Or depending on where it sets. Is it an unhosted wallet? Is it an exchange that participates in response to court orders? So there's nuances, but I would say start to finish, 6 months to get money back to victims.
Wow.
Yeah.
Edwin, when you think about compliance risk at KuCoin, tools that are available, the idea about being forward-thinking, about anticipating what may happen, like any strategies that KuCoin deploys that you can describe, like to anticipate potential bad actors out there?
Yeah, we actually do run our KYT every day on all the transactions, and then we have our own risk monitoring system. And then during these 2 years, we have deployed our AI model to try to identify all those suspicious activities. Mm-hmm. And basically, you're mentioning 24 hours. That is too slow, maybe I think, for exchanges. We run everything real time. So basically. But what is struggling us is that we have no standardization for this industry because we are a global exchange. And as I mentioned, that different jurisdictions, they have different rules. What we can provide to the customers or the users is different. And then if a user is coming from Africa or South Africa, we can only hold those assets for 7 days, but usually, but those money within those 7 days they will do wash trading. They will do whatever things they can to wash those money and get out from our exchange, and then laundry to another place. So what I'm trying to say here, speed is the first thing for recovering the user's assets. I would say every minute is very important. Even every second is very important. Those transactions will happen within 1 minute. Like if you send USDT from KuCoin to Binance, it will be less than one minute.
But just as a point of clarification,
yep.
Are you freezing assets, though, after you find out that something is bad, or just stopping transactions if you think they're bad based on your data? Right? Because those are two separate things. So, one is, okay, we know that wallet over there is a bad guy wallet, so we're going to stop this transaction.
Yep.
Right? But you have incomplete information.
Yes.
Right? So if you can see, for example, that you have an account holder that is constantly sending out data,
yep.
or sending out money, let's say, and then you find out later that, this guy, maybe this is illicit finance, maybe isn't, we aren't sure,
yep.
right? What are you doing in that instance?
So basically what we are going to do is we will, firstly, if we find suspicious activity from one account, we will inform the users trying to send an email or trying to make phone calls or trying to send message to the users. And
to the user. Yeah.
Yes,
okay,
to the
cool.
user.
Yeah.
And trying to verify whether the sending or the deposit or the withdrawal is really coming from that user. And then we have different level of risk level for accounts. So if some rules or some index was triggered, and then we will slow down the withdrawal. Usually it's the withdrawal or the trading, and then trying to like put a lot of like restriction, not necessarily restriction or verification for those accounts, so that if one account is got hacked, maybe his phone is stolen, but maybe his email was not stolen, and then we'll send the code to their email to try to verify whether the account was stolen or not. And then that's basically what we're trying to protect our users from, like, bad things happen.
Yeah. So just one point. I'm sorry, but this is the difference. Not that you should be freezing. I'm not even implying that you should be.
Yeah.
But this is where 24-hour court orders come into play.
Yeah.
Because that whole process, that takes weeks.
Yes.
Right. So you can stop transactions in real time, which that's the job of the exchange. But when you identify that there's a bad guy using your system, the process to actually stop that person from sending more money takes weeks. Takes us 24 hours.
Yes.
Because if you have a court order, obviously then you're just like, my hands are tied, there's a court order. That's the game.
Yeah, so basically what we are trying to do is like, we're trying to get the time from for the users
As you
and
should be.
for
Yeah,
you
yeah.
guys.
Yeah.
And then for the law enforcement either, to verify whether those transactions are suspicious or not.
Yeah, this is actually, though, where culture of compliance is a question at exchanges, right? Because most exchanges can put in their terms of service, with the exception of the jurisdictional issue you mentioned in Africa. But like most exchanges can put in their terms of service, we can freeze your money whenever we want, however long we want, if we think that you're committing criminal activity. Like, that's a contractual agreement that a bunch of them have, but sometimes they don't follow it. Right. So in that scenario, to Adam's point, if you're an exchange that is sitting, and I've seen this because I've served as an expert witness, like in cases that have alleged that exchanges did the wrong thing, and I've seen the internal exchanges, the internal communications at the exchange, and in the time that Adam's talking about, where the victim is losing money and the criminal is sending the money out, the exchange is sending these emails. Well, who are you and where did you get this money? And then 3 days later, the person writes back, I got that and from an inheritance. Can you provide us the relative? I don't know their name. And all of this BS is happening while the victim's money is departing the platform. And so the problem that the exchanges have is, yes, you have to make sure that you're not like screwing over a legitimate user. But at a certain point, once you're like, if you have transaction monitoring and you see that these funds came in and it has 50% direct exposure to scams and some percent, like, and you can see in a way that TradFi couldn't, and you're sitting there communicating back and forth with your user for weeks, that money's gone. And so one of the problems that I think we have, and Edwin, curious whether you agree or disagree, but regulators have been so slow to adapt to this system, and they have not changed rules. In the United States, our Bank Secrecy Act is from 1970. It was built for cash. And we have not modified rules and procedures to account for a technology that moves exponentially faster. And the crazy thing is because of how crypto works and you can follow this money, we can even sometimes see what exchange it's going to before it hits the exchange. So we're actually able to contact exchanges and say, hey, we're following this money. It's coming to you. We can see it because the transactions haven't been validated yet. So just sit there, catch it. And if you start to think about how this technology works, if you understood the tech and then changed the regulations, we could do so much better. Exchanges could do so much better. There would be so much clarity, right? The problem is all of these countries are so siloed and are so slow, and exchanges are global and are moving at the speed of light, and crypto is moving so fast. And it's just not catching up. We have so much intelligence, we have so much ability, and we're so bad at putting laws into place that would actually facilitate more action. And that's where we're having to find all these ways to get around it and get these TROs. And it's just because you just have not regulated to make it easier and clearer to help victims. And that's been super frustrating. And I say that as a former regulator who beat my head in the government and was like, if we don't fix this, we're screwed. Like, humanity is just toast.
So is there a secret sauce here? Like, if you closed your eyes and imagined a perfect world, like, what would that look like? Global regulation that's, symmetry across every country?
To be honest, no, because I have zero faith in governments, like especially democratic ones. That trend is not trending well. And so, like, for me, one of the things I love about crypto is you can envision a world where crypto says, we're going to do this better. The banks waited decades and literally said, we're going to do it bad unless you regulate us, and we're going to keep laundering money until you put enforcement actions in. And then after you put enforcement actions in, we're going to evaluate the risk, still launder money, and then maybe just pay a fine that's like 1 day of our transaction activity and move on and do it again. But in crypto, we have this visibility, we have this intelligence, we have this ability to make a better system. And I think what you're going to start to see, or at least I'm praying what you're going to start to see in crypto, now that the entire global industry isn't under attack by one political administration, I'd like to think you're going to start to see like the Harry Potter sorting hat of who is Gryffindor and who is Slytherin crypto, who's going to join the Swifts, who's going to talk to each other, and they have these communication networks, who's going to put into place terms of service and say, even if the government doesn't allow this, I'm going to transfer these funds because it's the right thing to do. And if a criminal wants to take me to court and sue them and sue me for taking their money, I'll take my chances. How many criminals have sued you for the unauthorized transfer of their dirty money back to the victim?
Even if it does, we're going to insure it. So that's one of the things we're doing.
Exactly, right? Like,
Sure.
the industry, the crypto industry has the ability to get together, whether through a SRO or some kind of like global, the crypto industry has the ability to do this well. But the question is, will they, or will they do what TradFi did, which is make as much money as possible off of money launderers, terrorist financing, and criminals, and take that money and run? And I think we're going to see in the next couple of years who are going to be the companies that just basically revert to transnational money laundering organizations, and who are going to be the companies that say, we really want the legitimate money that's out there and we want to do the right thing, even if governments are really slow to enact it. That's my incurably optimistic hope.
But I would imagine from a consumer perspective, understanding which exchanges provides them the best protection has got to be a differentiator, right? And as these exchanges are trying to differentiate, knowing which exchanges that are going to help stop those transactions versus those, that has to be a differentiator for
Well, this is the interesting thing, and I'm curious, Adam and Edwin, what you guys think, but like what I've noticed is that more people are putting into their ChatGPT and their Claudes, where should I put my money? If you're an exchange and all of Reddit says this place is terrible, it's chock full of criminals, I tried to get my money out, like, when content goes out now and people are using search engines and AI to look at exchanges, if you're an exchange that has a horrible reputation and lots of content and data is out there about how terrible you are, ChatGPT is going to feed that back, because all it does is take everything, whether it's true or not. If it's whatever it is, it's going to feed it back to people and say, hey, this is what I got from crawling everything, and it turns out it's pretty terrible. So if you're an exchange, I think you need to be really careful, because if everything out there is saying this is terrible, like, or I got on this using BS KYC, they have terrible KYC, this is a great place for criminals, ChatGPT is going to put that back too, right? So like, I think the exchanges have to be really careful, because if you think that you can still operate back the way that they did in like 2013, 2014, when some of the major exchanges were just straight up transnational money laundering organizations, that was before AI was putting back out there, this is actually what's really happening. So I would like to think that that data is going to be a lot more visible now. And the exchanges that build trust, which trust is going to be like probably one of the biggest things, the exchanges that build trust are going to get consumers who feel like it's safe to put their money there.
Yeah. So that actually, you sort of answered my last question, which is the rapid fire for the minute. So, which was basically looking 3 to 5 years ahead. Like, what is that one change that you would like to see made, whether technology, regulatory? I think we've gotten your view on that, Adam. And
Yeah. Basically, that, but from the private side. The 3-year-ish outlook for Inca, where we're heading, is basically building a private solution for that. So we're gonna probably this year launch a product where we work B2B2C and then start offering insurance products directly to retail users at exchanges and custodians and things like that. And the way that we'll do it is we're not going to insure the underlying asset, but we're going to insure basically coverage that if something bad happens, we will help you. So imagine like a fee-based structure. It's kind of like LifeLock for crypto. It's like a fee-based structure where if you sign up for the coverage or whatever, if you get hacked or scammed or something, we will help you coordinate with law enforcement. The primary reason why law enforcement doesn't act in most cases is because the investigation's a mess and the victim doesn't even know what happened. So we just put together a package for you and then send it out and coordinate with law enforcement globally in any jurisdiction. And then the tier 2 package we'll file a lawsuit on your behalf and cover the cost of that lawsuit because it's a fixed cost. And along with that, one of the issues that I know the exchanges run into is ensuring the underlying risk that the counterparty to that suit sues. We can just insure that. So that's where Inca's heading. Anyway.
All right, rapid fire, Edwin. Any one particular change you'd like to see in the industry?
From a exchange perspective, I would like to see if we have unified code of conduct for the whole industry. Maybe a SWIFT for exchange will be very useful for us. Regardless of intelligence like consumer protections, recovering stolen funds, all those bad things happen every day. If we have a unified framework that tells the global exchange how to operate those issues, how to resolve those issues, it will reduce significant amount of work for us and also for the users as well. So what I want to see in the next 3-5 years will be the whole industry working with the regulators to come up with a real travel rule or a SWIFT code for crypto, so we can protect our users much better than now. Yeah.
Great. Well, appreciate the insight of everyone here, and thank you very much.